Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
All right. Hey. Welcome back to the Invested Dads Podcast, a podcast where we take you on a journey to better your financial future. It has been a wild ride for Bitcoin over the past year, so we thought it'd be a good time to revisit the discussion.
Yeah. Speaking of Bitcoin, a lot of people have to go to the dentist after they Bitcoin.
Seriously?
I tried.
I think you used that same little pun in the last crypto episode.
Probably.
So actually, that's probably a good note that if anyone has not listened to our crypto episode from 2020, which was episode 20, they probably should before this, because it actually has some good information on what cryptocurrencies are, a little bit about Bitcoin, how they're mined, and things like that. So go listen to that episode.
Mine or yours.
Mine or yours. Oh, and we're going to get into the codes and all that stuff in a little bit. So, yes, that is kind of where we're at. So check that out before we get digging. But anyway, back to Bitcoin in 2021.
Well, it's been a quiet year for them. I haven't heard much, so tell me what's been going on.
Yeah, that's exactly right. It hasn't been much on the Bitcoin front. But yeah, let's look at the numbers. So kind of thinking around the time of the stock market bottom. Yep. So actually like March 16th of 2020, Bitcoin traded as low as $4,904 per Bitcoin.
So just this last year.
Just 2020.
$4,904.
$4,904. Bitcoin recently peaked, so on January 8th of this year, 2021, at 40,041.
All right.
That represents a 716% return in less than 10 months.
Okay, so about what you expect when you
stock
buy,
market,
my fixed income or my emergency.
Exactly, 716% in less than 10 months. So I don't know, spitballing, that's 900 and some percent annualized or whatever. It's a lot.
That's crazy.
It's a lot. So following the peak, the cryptocurrency Bitcoin that we're talking about here fell nearly 20% in a day, and has yet to recover its all-time highs at the time of this recording, which is on the morning of the 20th. Wow. 20% in a day. That's kind of a wild ride. So over the past 5 years, Bitcoin has returned about 9,400%. 9,400 compared to the stock market, or S&P 500, which is about 100% over that same period. That's a lot different. Gold, on the other hand, during the same time has returned 70% over the past 5 years, and silver 82%. Wow.
So
much different.
9,400.
Yeah.
So if I had $1,
it'd be worth $94.
More than that, right?
No.
Because doesn't it compound over that time too?
No, that's the compounded number.
That is the compounded.
So
number.
yeah, so if you put $100 in Bitcoin in 5 years ago, multiply that by 94.
Wow, that's a lot of money.
Oh yeah. So that's pretty good. So anyway, what drives the price movement? We should probably kind of dig into that. So there's really three factors, right? Mm-hmm. Going to get really nerdy. So first two factors are supply and demand, which we're going to talk about. Then the third one is euphoria. So supply and demand, things you probably learned in Econ 101 class. So thanks, Professor Gamba from UF, if you're listening. So supply, think how many of something is out there. So traditionally, this is an upward sloping curve. And if, Josh, you look at my board over here, I actually have supply and demand curves drawn on the board right now.
You do right now.
So this is traditionally an upward sloping curve that increases as there's more of something available, right? Supply.
Yep.
Simple enough. Demand, how badly something is wanted, is traditionally a downward sloping curve. And they intersect. So the higher the supply is, then the lower the demand is, and therefore a lower price. The lower the supply is, think scarcity, the higher the demand is, and the higher the price will be, all other things equal. So that's kind of supply and demand. And those factors are pretty straightforward. But something that is pretty difficult to put a value on, especially when it relates to things like Bitcoin, is the factor of euphoria. So supply and demand can explain a good bit of Bitcoin's move, but it's no secret that overnight price movements, particularly to the upside, that has made people millionaires, has brought people to the point where they'll just buy it because it's going higher and keep doing so because the higher it goes, the more good they feel, regardless of the underlying economic value. So this is really what separates Bitcoin from other assets. So back to supply. There are about 18.5 million Bitcoins in I'm using air quotes on a podcast,
They can
quote
see it.
unquote, circulation. They're not really in circulation because there's no physical
Yeah, they
coins.
don't actually circulate.
And only about 20 million that will ever be mined total. That's only about 1.5 million left. So, yeah, like I said, if you want to learn about mining, we talk about that in the other episode.
When you talk about that, it's not like every day it's mined. There's a process, and it gets longer and longer as it goes out.
Yes.
This next Bitcoin is going to be harder to mine or take longer to mine than the last one, and that's kind of this exponential.
Or at least take more computing power.
More processing
Exactly.
power, yes.
To solve those complex problems on the blockchain that we talk about. So, yeah, so that's supply. So supply is very slightly sloping upward, but it's nearly a flat curve because there's not a ton of Bitcoin left. You kind of know how many there are and how many there will be.
Yep.
Demand has remained elevated for years among retail investors, but overall demand increased substantially in 2020 and even to today in 2021 because large institutional investors have really picked up their interest in Bitcoin, as well as actually many companies, even publicly traded companies, are wanting to store like portions of their cash reserves in Bitcoin. So that's pretty crazy.
So storing your cash reserve in a asset class that
can
dropped
swing.
20% in one day
Yeah.
does not make sense to me.
It's like that emergency fund, that episode that we talked about. We said, yeah, you
Yeah,
shouldn't
put it somewhere where it's still there.
Yeah,
when
exactly.
You go need, look for it.
So-
And chances are, now they're not 100% correlated, but Bitcoin and stocks can follow a trend where when you see the stock market go down,
Yeah.
like when we talked about the low of Bitcoin there around March, that's when you might need your emergency money.
Yeah.
And so I just, oh man, it seems crazy to me.
It doesn't, and we're going to get into some of the reasons why people buy Bitcoin, but some of it doesn't make sense in the fact that people think of Bitcoin as like a hedge against equities.
Yep.
It's not. It's actually worse.
Yep.
So, and we'll talk about that in a little bit.
Yep. Before you get out of the supply and demand, you did a shout out to your econ professor.
Oh, yeah.
And I loved my econ professor. So, Mr. McFerrin, Professor McFerrin, thanks for all those classes. Enjoyed them. And, supply and demand. I knew what Austin was talking about.
See, he knew. That's exactly it. So back to those three factors. So the third one, like I talked about, euphoria, in my opinion, has actually been lower in this latest rally than it was at the end of 2017, which it seemingly like Bitcoin shot up overnight back in 2017. And the one way that you can kind of gauge this is from Google searches. You can like look up the frequency.
just Google search?
You
Is
can
it more popular
Google
now
search.
than it was?
Exactly. Someone told me. It's on the internet, right? It's true.
Wikipedia. It's got to be true.
Wikipedia. So overall, Google searches related to buying, owning, and trading Bitcoin are far below levels back in 2017, even though the price is much higher.
So someone saying, what is Bitcoin? Or how do I
Exactly.
buy Bitcoin? How do I own Bitcoin? Those type of
Exactly.
things. Gotcha.
But this does not mean that there is not euphoric action going on. There certainly is.
When you, based on talking about banks and larger institutions getting involved, the demand may have switched. I mean, I'm guessing a banker's not Googling Bitcoin as they're getting ready to invest part of their cash reserves into it.
Yeah, they probably already took care of the
Yeah.
research.
So the demand is probably, or maybe euphoria, however you want to look at it, from an institutional standpoint, is pushing pressure because they're not buying one Bitcoin.
Right.
They're buying
Many.
a handful of
Yeah.
Bitcoins, even when they're trading at $40,000. And
Yeah.
so, yeah, you're right. I think that's the euphoria is that it's blending or moving into other institutions that hadn't touched it in the past. And
Right.
so this euphoria is expanding beyond just institution or individuals into institutions.
And it's just, I don't know.
Oh, man.
Some of these things, you remember our Tulip episode,
Yeah.
bubbles, asset bubbles?
Yep.
There really was no rhyme or reason behind it. Was
Why are you
supply
owning
and
a tulip?
It was supply and demand back then too. They were super rare, super hard to get a hold of, so they were very expensive. All these things, so tulips became super expensive. Well, this is some of the. It's not the same, but some of the vibes of an asset bubble certainly can be correlated with Bitcoin.
FOMO, the fear of missing out, has a piece of this, right? You see Bitcoin move from 4,000 to 40,000, and
then you
man,
want to
what did I
buy it
miss
because
out
it's
on?
going up.
And then you see a news article that says it's going to 190,000, and you're like, man, I can get in now.
True. So let's kind of dig into some reasons of why people would buy Bitcoin. So number one reason is people believe it will go higher.
Yes.
This is probably the biggest reason people buy it. There is substantial market exuberance specifically around Bitcoin.
Yes.
Number two, the chart doesn't lie. Bitcoin has serious upside momentum. And whether it's stocks, bonds, commodities, or even cryptocurrencies, the path of least resistance is for things to keep trading the same direction they have been. So in this case, up.
So in our terms, that's momentum.
Right.
That's what, when we
Yes.
talk about in our industry,
Yep.
momentum, if something's heading in one direction, it'll continue that way until something...
Right.
It's almost like Isaac Newton's philosophy, right?
Yeah.
An object in motion will remain in motion unless force opposite reacts on it.
You know, as they say, the trend is your friend. And if the trend's going up, people believe it will continue to go up.
Yep.
Number 3, people are afraid of inflation. And they believe Bitcoin will shield them from it and return more than inflation.
Which it has
Which
in the
it
last
substantially
1 year,
has.
5 year.
Even forever,
Yes,
since
'cause it
since
started at zero.
inception.
Yeah.
But the truth is that at least since Bitcoin was created, we've had such little inflation, and the track record is so short that we really don't understand how the relationship really works. We would have to have all of the Bitcoin in circulation, and
And no new cryptocurrencies
Right.
coming out. Because I think that has an impact. Because
True.
we're talking Bitcoin, but they're one of the cryptocurrencies.
oh yeah, and there's hundreds, if not more. This is just the biggest.
Yes.
So, yeah, people are afraid of inflation, and you know what? It has, we talked about it earlier. It has outpaced inflation. It's outpaced gold. It's outpaced silver.
Barely squeaked by.
9,400% what was CPI up over the last 5 years?
1.8.
10%, I think 10%
Did it hit
total,
10?
cumulative,
Oh, cumulative,
over 10
yeah.
years. So, yes, it's done that. But such a short track record, and volatility is something crazy. Another reason, number 4, that people buy Bitcoin is just as a hedge against uncertainty. So, like we had kind of alluded to, many people think that owning some Bitcoin can provide a hedge against equity market uncertainty. They must be believing that they're negatively correlated. But in reality, they're positively correlated.
Positive.
They both have gone up
positive.
over the same time. Yeah.
Okay. Negatively correlated,
True.
positively correlated. Explain that real quick.
Okay. So a negative correlation is when one thing goes up, the other thing goes down. So
They go
stocks and
opposite
bonds.
directions.
Stocks and bonds. Generally speaking, equity market goes up, bond prices go down because yield goes up. Another inverse relationship there. So negative correlation is opposite.
Okay.
Positive correlation is one goes up, the other one goes up.
Okay. They follow.
So yeah, equity market and yields is one example of that. So those kind of things.
Okay. Or like when Ohio State does well, my attitude goes up. Those are positively correlated. Something like that. Gotcha.
Or like, yeah, donuts.
Donuts.
The more donuts
in
you
the
eat,
room and my attitude in life,
Exactly.
they follow the same trend.
Exactly. So
The more
yes.
donuts there in the room, the happier I get.
So that is correlation. So yes, equities and Bitcoin are actually positively correlated. Both have gone up over the same period of time, at least over the last while, and actually went down around the same time too. So positive correlation there. So if you own Bitcoin, you're actually going to increase your overall portfolio volatility instead of decreasing it, which would be your goal.
Yeah, because if it drops 20% in a day and the market goes down, it's
Double
not a fun
whammy.
day. Yeah, it's not a fun day.
Instead of going the opposite. So that is kind of a flawed view of Bitcoin. And finally, people think it's a safe haven against central bank and reserve actions that really are going to ultimately weaken the dollar or continue to do so, I guess, as we've seen over the last year or so. Bloomberg Economics, I read a piece yesterday, they attribute about 60% of Bitcoin's returns since October of 2020 to a combination of exuberance and momentum. So, like, not fundamentals at all, which is 60%.
That's a lot. That's a lot.
A further 35% of the returns can be attributed to hedging against inflation, which not inflation we're seeing now.
Yes.
This is
Future
anticipated inflation,
Okay.
which, for all intents and purposes, it seems likely we're going to have some sort of inflation over time.
Well, the Fed themselves are trying to push
They
inflation
want
up.
inflation,
Yeah.
but with all the printing of money and the dollars out there right now, we're going to have inflation at some point. But that's kind of what the most of the movement has been.
So that's 60 plus 35. So if my math is right, that leaves 5%, which is probably explained by our podcast on Bitcoin getting people excited about
I
it.
think so.
Give or
Last
take.
year's and this one coming up
Yeah.
is going to explain the other 5%.
Makes sense.
So how people buy Bitcoin, that's also changed
Yes.
over the last couple years anyway. So the original place where you could buy Bitcoin was cryptocurrency exchanges. And these are literally, the website, is made for trading and buying and selling cryptocurrencies, not just Bitcoin, but other ones. An example of this is like, there's a big one out there called Coinbase. And that was the main way that cryptocurrencies were traded. Nowadays, in apps you already use, you can buy Bitcoin. You can buy even like other ones like Ethereum or Litecoin or whatever. Square and PayPal have gotten into the Bitcoin game, and I actually have a PayPal account, and I actually was able to trade some Bitcoin. Now, I not hold Bitcoins. I didn't put $40,000 into a Bitcoin, but yeah, you can buy and share partial pieces.
Well, see, that's
from your phone.
And that's the key too. When you talk about kind of the exuberance, is when it comes to stocks, if I want to own one share of Amazon, for instance, it's a couple $1,000s.
Right.
It's like $3,000 or something. But if I want to buy just a little bit of Bitcoin, I could put $20 in it.
True.
And so that's the other thing, is it's easily accessible. I don't have to have a whole Bitcoin. I could buy a portion of it.
Right. And so that's something that's changed really in the last year was when Square and PayPal kind of got on board. And it's super easy and user friendly, and that's why the people on the street can just buy and sell Bitcoin or whatever they want whenever they want, really for very affordable fees now too. They actually had no fees on PayPal, their ability to on their crypto trading platform at all until the end of 2020.
Okay.
So they got you hooked.
Oh yeah, you get in early, like, hey.
And then they're like, oh yeah, I like
first
this.
trade's
And then
free.
in 2021 they put I don't know what the fee is. It probably isn't too much, but interesting.
Now, a third way
go.
is they now have things that track Bitcoin.
True.
That if you say, you know what, I'm horrible with passcodes, I keep losing my password to my
we're getting to
computer
that.
and all that. Because there's some crazy stories to that. But you can now buy exchanges where they hold it. They actually own physical Bitcoin.
Right.
But you're buying in kind of like a mutual fund or ETF, that same structure, and then I could trade that.
Yeah,
And
so
it's
the
available.
Grayscale Bitcoin Trust.
Yep.
That one is one.
And so then that's similar to buying a investment in equity because it's traded on an exchange. And so it's not as secure because with Bitcoin, like each one is independent. That's what the blockchain is. It verifies those transactions.
Yep.
This is done similar to what you'd buy an ETF. So, but you don't have to worry about losing your password.
Yeah, so let's talk about that. So first of all, if you buy a cryptocurrency, not just Bitcoin, but specifically let's talk about Bitcoin, on like a crypto exchange or whatever, you are given a passcode, like an access code for that particular coin or your portion of that coin or whatever from the blockchain. That is unique to you and the portion that you hold. And if you lose that access code, you lose access to your cryptocurrency forever.
Yep.
And there's no way to retrieve it. No one stores it for you.
Yeah, it's gone.
And all those things. Now, this is where it's kind of nice to use something like maybe a fund, but specifically I was thinking something like PayPal. You do not have access. You own the crypto. You do not have access to your code. PayPal securely keeps track of all that for you, and you can't lose it, and you can buy and sell it without worrying about it. So it's a little bit lower risk because there are literally thousands, if not more, of Bitcoins out there that people have lost their access code to.
I just saw an article.
Millions of dollars.
Millions. It was over, I think, in London or somewhere in Europe area. But he threw away a hard drive that had his key on it or whatever. And he's pretty sure he knows the landfill it's in.
Oh, man.
And in this article I was reading...
Might be worth buying the landfill.
He's been petitioning or requesting the government, the local government, because they have this law there that you can't go in there because it's a contamination risk, blah, blah, blah. So he's been petitioning. It's like $100 million. It's a lot of money on this Bitcoin thing that he lost his code to. So he's even offered to donate like 50% to local charities or to help with COVID or something like that. And they've denied him this ability to go in there. And I'm like, for $100 million, it may be worth the fine or whatever they're going to fine you to get in there and get it if you could find it. But
you could hire a criminal
drive and it had it all on.
You could hire a criminal to go in and get it for you and still come out.
He probably won't give
money
it back
ahead.
though.
No.
But he thinks it's still salvageable. But it's been a couple years, but he thinks it's there and he thinks he could still get it.
Can you imagine just going in and digging around?
But can you imagine knowing that you threw away
millions
of dollars?
Many millions of dollars.
Oh man. Okay. Let's take a break.
I like breaks.
Dad joke of the week. I got a good one. I saw this one online.
It wasn't about you Bitcoin and broke your tooth?
No. This is it. So, of the 100 greatest inventions over the last century, the whiteboard, it's very remarkable. Remarkable.
That's pretty funny. I mean, whiteboards were a game changer.
but it's remarkable.
It's remarkable. You can remark it.
I like that. That one really.
Something that whiteboards don't allow you to do. Scrape your nails.
That's
on
true.
them.
You can't do that.
That sound and that feeling. I get the heebie-jeebies just thinking about it. So yes, whiteboards are remarkable, Josh. So let's kind of take a step back.
All right. So we talked about what it is. We said what it's done. It's up 9,400%
for the past 5 years.
5 years. Should you invest in it?
So I'm going to quote my esteemed colleague Jess, also known as the Everyday Advisor, and say, and I quote, "Invest? Absolutely not. Should you speculate? Well, maybe." And that's because...
What's the difference?
Yeah, I view Bitcoin not as an investment, because you can buy Bitcoin with anticipation that it'll go higher, but that anticipation, that's just speculation. You're just anticipating that it'll go higher. There is a difference. So if you have a small sleeve of your net worth that you could stand going to zero, or you could stand doubling, hey, that could do either one.
9,400% growth.
You could allocate a small amount to something like a Bitcoin. Don't bet the house on it, is what I'm saying.
So really, when we talk about it in a diversified portfolio for long-term investing, this really doesn't fit in that category.
True.
But what it does fit in is saying, hey, I have a little bit of extra money that if I just lost this money, it just misplaced it in a landfill because I threw away a hard drive, I would not be devastated. It would not impact my financial future.
Yep.
Then maybe I could consider this being one of the things I do with it.
Yeah, this is like play money.
Yes.
Something that you were going to spend on fancy donuts anyway.
Yeah.
But instead, you're going to put it into the cryptocurrency market. So yeah, don't put enough in something like this that it will affect your financial goals or that you will depend on it for your financial goals to work out in a certain direction.
Double every year.
I know.
Go up
like, I'm going to be a Bitcoin retiree by the time I'm 50. No, that sounds like a bad plan.
Yes.
Now, some people have, bought Lamborghinis and done all kinds of things,
and then they got a huge tax bill.
And then they got a huge tax bill that they weren't planning on and had to get in trouble. So anyway, yes, that is kind of the overall thought. And we'll link, there's actually, Jess had a really good blog about this exact topic, which kind of prompted this episode. So we'll link that blog in the show notes. But yes, Bitcoin, we're not going to call it an investment. We're going to call it speculation. That does not mean don't ever, no one can ever hold it or should hold it. If you want to do that, that's fine. We're not advising that you do or that you don't. But it's more of a speculation.
Yeah, I think, like you said, very interesting. But I feel like this is one asset class where people invest in it when they don't completely understand it, and that can sometimes be dangerous.
They could get burnt.
Yeah. So, hopefully this helped you a little bit, kind of catch back up to what's happened in the last year or so with Bitcoin. We enjoy watching it. Now you can see it. Like we have our TVs tuned to, what is that channel? CNBC.
Yep.
And now when it shows the Dow and the S&P,
it shows
Bitcoin as well. And so, it's becoming more mainstream. It's becoming more visible in the investing world, which also means more people are kind of trying it out, which is not a bad thing, but you just got to understand the risks to it. Can you afford a 20% drop in one day?
Yeah.
Because that's happened. And it will probably
even
happen
this
again.
Year. Yeah, exactly.
Austin's predictions for this year, that was one
of
his thoughts.
I think I predicted that at some point this year it will hit 20,000 again.
Which is a 50% drop from that high.
Which, yeah, exactly. And we're still not back up to where it was, and it's down 5% more today or whatever. So we'll see if I nailed that one. We'll have to see. So anyway, as always, check out our free gift to you. It's a brief list of 8 principles of timeless investing. These are overarching investment themes meant to keep you on track to meet your long-term goals. No, we don't mention Bitcoin at all because that should not impact your long-term goals. But check it out. It's free on our website. Josh, how can people help us grow this podcast?
Yep, like we say always, subscribe. That way you get our most recent updates when we drop a new episode every Thursday. Leave us a review on Apple Podcasts if that's where you listen. Email us with any ideas or questions, hello@theinvesteddads.com. We love hearing from you. And then also, if you know somebody who's talking about Bitcoin or cryptocurrency, share this episode with them.
All right. Well, until next Thursday, have a good week.
Yep. Talk to you later.
Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.